Robinhood has been one of the best performing stocks of 2025. It's up 140% year to date. And many investors on X are telling me and are saying that Webull is going to be Robinhood 2.0. The stock just went public. It's actually turning profitable. So that's very interesting. This is when you tend to have some kind of a major move. When a company turns profitable, it's only up 23% on the year, nothing close to Robinhood. And as a Robinhood shareholder, I'm up 200% on the stock. I'm going to look at Webull. I'm going to let you know if I'm seeing in Webull the same things that I've seen in Robinhood. And if I believe Webull is presenting some kind of a generational buying opportunity, or if I believe Webull is a scam, it's a trap, and it's likely going much, much lower. So I really hope you enjoy it as always. Now, if you're not familiar with Webull, you could say is the closest thing to Robinhood as possible. They have a very interactive platform that a lot of younger people like to trade on, and many different people, but it's mainly a platform for trader. It's not really something for long-term investors, so it's a big one on options and other kind of futures and other kind of equity options and trading in general, not really for someone that's looking for a retirement account. That's all I would say about Webull. But Webull has actually been growing rapidly. They have 24.1 million users. That's very impressive. 17% year on year. Now, funded accounts, it's a big difference. Out of the registered users, funded accounts are like 4.7 million. This is a big difference between registered users and funded accounts. And funded accounts grew 10% year on year. They make money in two different ways. The first way is within trading kind of volumes, and they make money when you trade on the platform, and mainly through equities. Equities is 18.8 million. Then they make money with options. This is a big one again for traders, 53.4 million. Then you have something called platform and trading fees, and they make 9.5 million from that. The second way the company makes money, I believe, is mainly from lending, such as margin, or when you lend your shares, and stock lending and cash, interest on cash and other kind of things. Now, equities volume has been increasing, and volumes in general have been increasing, which is actually a good trend. But if you look at interest income, it has declined quarter on quarter, but this is largely due to the stock market going down, and it's also due to interest in general. Interest rate has been going down, and this actually explains why it has declined quarter on quarter. So it's nothing really related to the company itself, no weakness or anything, but it's mainly due to interest rates going down, and this is very understandable. Now, the company has an amazing growth map for 2025. They're planning to do a lot of things that's going to drive massive growth for the company. One of them is launching the Webull app in Latin America. I don't believe Robinhood is in Latin America. I don't believe so. So that's going to be a massive area of growth for the company. They're planning to relaunch crypto in the United States. So if you look at the company's trading revenues, they have equities, they have option and platform fees. They don't even have crypto. Crypto is huge. If you look at Robinhood's crypto revenues are insane. So if Webull is going to launch crypto again in Q3 in 2025 in the United States, that's going to bring in massive growth for the platform. And then they're also going to launch back in the Netherlands. They want to support mutual funds, which I don't believe is going to do too much. But crypto in the United States, this is going to be massive growth for the company. So the company has an amazing growth roadmap for 2025, and they just turned profitable. As you can see over here, losses have been improving every single quarter, and that was pretty much their first profitable quarter on a net income basis in Q1, and we'll see how sustainable it is. And by the way, I'm using Fiscal.AI to come up with those charts, so if you want to try it out, they give you 2 weeks of free access if you use my link in the description. But now I'm going to get into some of the bad stuff, and there's a lot of bad things with Webull that I have to talk about, and concerning things. The first one is declining net deposits. Net deposits have been declining every single quarter, 1.6, 1.2 to $1 billion. Now they're still up a lot, you could say year on year, but quarter on quarter, the trend is really not good at all. Assets have declined because the market is going down. This is understandable. But net deposits declining in 3 quarters in a row. They're still, growing year on year. But quarter on quarter, they've been going down. This is really not a good trend at all. And this is my biggest problem with Webull is in direct competition with Robinhood. They have the same demographics. They're targeting the same kind of people. Like if I'm looking into Robinhood is the leader amongst younger people. They have a platform, they have benefits that you really can't beat. They have so many resources. They could do like a 5% match and attract all the Webull users. The biggest difference between Webull and Robinhood is if you're in the Webull ecosystem, you can switch to Robinhood like that. You can exit the ecosystem anytime. But if you're a gold member within Robinhood, and you're using the benefits of Robinhood Gold, it's very hard for you to exit the Robinhood ecosystem. So this is the biggest difference that a lot of people don't understand. They just believe that Webull is just another app and Robinhood is just another app. But Robinhood is creating a sticky product for $5 a month. Well, once you get in, it's very hard to get out. And for $5 a month, you're getting 4% on your cash, a 3% IRA match. You're getting lower kind of index and kind of commission futures. You get the credit card with 3% unlimited cash back. Webull has nothing like that. There's no credit card in the entire market that has a 3% cash back. The highest one is like 2%. For Gold Card with Robinhood, 3% unlimited cash back. This is insane. If you want a managed account instead of a financial advisor, maximum fees, $250 a year. If you want private banking online, something that's normally for wealthier individuals, you can get it through Robinhood Banking, which is rolling out on a major scale. And now you have Robinhood Mortgage, where you get almost not a 1% discount, but a very high discount on your mortgage that's much, much lower than anyone else. So if you want a mortgage that's much cheaper, you go to with Robinhood Gold. You're not even going to look at Webull. If you want a 3% cashback card and you're using it with Robinhood, you're not even going to look at Webull. So once you're in Webull, if Robinhood offers something compelling for you to come into the platform, you're going to leave Webull anytime. So it's very easy to leave Webull. It's not so easy to leave Robinhood. And this is the biggest problem I have with Webull, is it's not interactive brokers. I use interactive brokers because I change currencies to invest in other countries and other kind of stocks. I can't do that with Robinhood. But with Robinhood and Webull, I could pretty much do the same things. So if I'm using Robinhood, I'm getting a 3% cashback on my everything I buy. I'm getting a mortgage that's discounted. I'm getting everything I need in one app. Why do I need to use Webull? There's no benefits for me using Webull. And that's why I believe deposits have been declining, because the deposits at Robinhood have been actually increasing. And this is the biggest one with the platform. The second risk is this is still a Chinese-linked company, and the company has faced scrutiny as soon as November 17, 2024, due to it being a Chinese-linked trading platform. And I believe it's still largely owned by Chinese entities. And this is something that's going to stay with the company forever. So if you're buying Webull, you're always going to have that I would call Chinese discount or Chinese kind of concern, where always something is going to come up about China or some kind of executive and the stock is going to go down. And you don't know how much discounted it will be just because it's linked to a Chinese entity. And this is something that I tend to avoid in investing. If something is linked to China directly, I tend to avoid it. That's just what I do. Like if you look at a lot of things that's happening, and it's been happening since 2019. And the Webull CEO, he said Webull is both a US and a Chinese company. I'm not sure how that's going to work out. And Webull appears to have affiliated research and development facilities with hundreds of employees in some kind of city in China, and they failed to discuss at least 13 individuals identified on the FINRA broker check website as current or former registered representatives of Webull, who appears to be Chinese nationals based in China. And there's all kind of risks between China and the United States within Webull and within the ownership, within the affiliation. And as finance is a little bit a touchy subject with the regulators and personal data. So that's always going to be with the company. I would call it the Chinese discount. And it's impossible to assess. I mean, if you look at Alibaba, great company, growing, but we don't know the multiple just because it's a Chinese stock. Could be 10 times, 5 times, 3 times, 15 times, 20 times. So we don't know the floor. And in the future, Something could come up about Webull with China, and the stock goes down 20-25%. So you really never know. And that's a big one. The last one is they just announced some kind of an equity agreement where after 3 years or something, they would have to issue Series A stock at a 2.5% discount to market price to raise $1 billion in cash to expand. Now, normally after a company goes public through a SPAC or something, they would raise money. Like they would not need to raise money immediately, but the company apparently needs to raise money immediately. And this is something that's not too common with a lot of companies that went public. Now, if I look at everything else with the company, and I have to mention, I haven't mentioned it, is that growth have been stalling. Like it has gone nowhere since 2022. It has gone up 30% in the first quarter. And I believe I did show you that in this presentation when I started the video, and I showed you that revenue growth has grown up around 32% in the first quarter. So it's been improving in the first quarter. But if you look at the last 3 years or so, 3.5 years, it has pretty much gone nowhere. So you had no revenue growth. So if you're betting on Webull, you're not betting on the past kind of repeating itself. You're not betting on a trend. You're betting on something that's like different from the past. And that's normally a speculative bet. Okay. Now, if I look at the sales multiple, the company is trading at 16.6 times trailing revenues, not earnings, revenues. Now, 16 times revenues for everything I showed you, direct competition with Robinhood, the Chinese risk, which is impossible to assess, then they're raising money again, and no revenue growth almost over the last 3.5 years, and pretty much no competitive advantage to retain the users. The users could do the same thing at Robinhood, and then when they go to Robinhood, if they use the gold card, if they use the mortgages, they're gonna stay, they're not leaving. And to me, the way I look at it is 16 times revenues is extremely expensive for such a bet with Webull. Now, if they do execute on their plans of, bringing in all those things they want to do with crypto and expanding in Latin America, you're going to have some growth. So the stock could go up. I mean, it could play out. But would I say this is the next Robinhood where the stock will go up hundreds of percent? I highly, highly doubt it. And if I had to assess the risk and the reward, I would personally not be willing to take the risk on Webull. I think there's better growth stocks in this market. I talked about them on YouTube. Way better risk to reward, much better predictable business models. I told you guys about SoFi. Its earnings per share is going up much faster than Webull's revenues. Not just revenues, but earnings per share. So to me, this is not a bet that I'm willing to take. And I think there's more risks than rewards. I mean, it could play out. But if I would say it's the next Robinhood, it's not the next Robinhood. And I hope I highlighted the risks, and I hope I highlighted some of the upside also. And that was just my opinion on Webull, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.